Hey guys, so I moved into an official office finally down here in the house. It's a little echoey in here. If my audio is not the best today, let me know. I'm going to try, if this is not the best, to use my headset tomorrow. I've been told that has a little bit better quality, so let me know what you think about the audio and we'll go from there. All right, taking a look at the CPI numbers from today. Not the best numbers we've ever had, but also not the worst numbers we ever had. So we had CPI year over year coming at 6.4%, which previous was 6.5%, so just barely down. We had 0.5% month over month CPI, which was a pretty big rebound from the previous 0.1%. Core year over year, we had 5.6%, which was just barely down from 5.7%. And then looking at core month over month, we came in at 0.4%, unchanged from the previous 0.4%. So let's talk about these numbers a little bit here. When we look at it, this is actually the smallest CPI year over year drop since the previous month over month, or since October to November, when we had an unchanged reading. Looking at month over month, this is the biggest rebound increase to the upside of 0.4% since the June to July, which went up 0.7%. Core year over year, we only dropped by 0.1%, which is the lowest drop since October to November, which was a 0.3 increase. And then core month over month was unchanged, which is similar to what happened from December to January. So overall, honestly, looking at these numbers, I mean, this is not a bull case. Though, as obviously many of us want to be bearish and many of us want to understand what this soft landing narrative, that the inflation narrative, all that stuff, I mean, everything Jay Powell said, pretty much is true. Jay Powell is pretty accurate that we're going to be doing rate hikes for quite a while longer here. I saw an article put out today by Nick. He tweeted out that there's a chance of 4 more 25 basis point hikes before they stop. So if we look at the Fed meetings here, so that means we got March, May, June, and July. So that means the earliest we could potentially see a stop in hikes would be the September 20th meeting. All right, so looking at a couple more things with CPI here. Of the last 12 CPIs, this is a post-CPI day. 5 of the days after CPI have opened red and 7 had opened green. 5 of those days closed green and 7 closed red. So there is a higher percent chance of a green open tomorrow, but a higher percent chance of a red close tomorrow. However, when we look at the last 6 CPIs, 2 of those opened red and 4 of those opened green. And 2 of those closed red, 1 did close at exactly 0.00%, and 3 of those closed green. So of the last 12 CPI, you have a better chance of a green open followed by a red day. And of the last 6 CPIs, you have a better chance of a green open and a green close. So kind of a mixed bag, but we'll be definitely interested to see what CPI brings, or what post-CPI day brings tomorrow. So let's talk about the market here. So if you looked at the opening here, so we again had a little bit of a front run here at the 8:15 to 8:30 candle. And then actually what was interesting is that initially the reaction, when you look at the numbers, was what you would expect. We had this downside reaction, and it was looking actually pretty favorable that this might actually finally get the standard reaction that one would expect. However, then we had a massive rocket. We shot all the way up to this 416.67 before we finally came down. And you can see from there, we had a huge downturn. The market opened, and we just came out, and we straight dropped. And then we had a huge rocket up here, all the way back up to that key 415 area. And then we had a massive dump. And then from here, we started to have some Fed speakers. And then pretty much once we hit this 408.8 right here, it was just, okay, this is too much. And then we just started bull trending back up and kind of just finished. We had a pretty big drop here in this last candle, almost $1 drop. So kind of a mixed bag. Essentially, we just had a big range day. We didn't really have too much to really talk about. So when we look at the daily chart here, if we look at our February 2nd, I think I said in my written February 1st, but I meant to say February 2nd peak here. We now have 1, 2, 3, 4, 5, 6, 7, 8 trading days that have failed to make a new high. And there's been some pretty good opportunities for it to do that. There is a chance this is a really nice bull flag, actually. You can see the pattern here. Bull flags basically look like this. You have this like big line up, and then you kind of have a slight slant down, and then it pops up like this. So a bull flag target here would put us about that 419.5 range. However, if we're starting a new bear trend down here, we really could be retargeting this 405.3. Realistically, if you look at this chart here, pretty much 405.8 to 416.8, so about that $10 range, which is what we usually see. Essentially, we're just consolidating there right now. We don't really have enough to push us up to 419.5, but we don't really seem to have enough to push us underneath 405. So it'll be interesting to see what we do tomorrow. If you factor in nothing and you just look at strictly like the technicals here, we had a breakdown under the 8 EMA, a major bounce off the daily 20 EMA. We came back, conquered the 8 EMA again. We did wick below the 8 EMA, which would, generally speaking, open up the downside. Generally, once you wick below, it is a hint that the kind of, I'm trying to think where it happened for a good example. Kind of like here you close, or we're here, we wick below it and then we dropped. And this is actually last CPI. And interesting enough, this is CPI the day after CPI. We kind of see a pretty similar pattern here. Have this really long candle followed by a doji, big body doji, and then boom, big drop. So, but anyways, usually when you wick below it, it kind of hints at some downside to come. So tomorrow, a really key level is going to be this 411 to watch. If we break back under 411, then realistically, we're going to start targeting that 408.6, which is where we bounced in the morning. And then from there, we could even see as low as 405.3. I wouldn't say to go long-term bearish until we break under 405.3, or we really just hit some sort of extreme momentum or extreme level to the upside. There's really not enough reason to long-term short this right now, but I also don't think that there's enough reasons to long-term go long, like call this either. I do think there is a road to 419.5, but today, the Bulls, I mean, if they were going to do it, they could have done it today, and they definitely fumbled on that. So it's definitely going to be interesting to see where we go from here. To the upside here, though, we're watching for this 413, breakthrough 413, breakthrough 414.5, and then that starts talking about 416 to 420 again. So taking a look at futures here, kind of the same thing here. We have this big consolidation area here from 40.95 all the way up here to 41.95 really. And we had a big doji here, and this 41.50 is kind of becoming a major level that we just keep bouncing over like this. You can see kind of have some upside, downside, upside, and it's all pretty much trading right over this 41.45 or 41.40 to 41.40 or 41.50 area. So I'm definitely going to be watching to see what happens at the daily 8 EMA. We obviously retook it here, but we have this massive doji here, and there is the same bull pattern flag going on here. But if we were to break under 40.95 again, that would break this support again. So that's something else to really factor in here too, is that we have twice now broken the bull channel support. And same thing on SPY here. We had this bull support from different lines that we broke through twice on 2 different occasions. So the more we break through support, and yeah, we redrew this support line to see if that's where we're going to hold now, but the more supports we break through, the more chances that this bull flag doesn't play out like the bulls want it to. So really here on futures, our 2 major pivot levels, I mean, really is right here at 41.33 and then 41.50. That's pretty much our 2 levels. We kind of have one of those like double patterns I was talking about down here where we have upside potential if we're over it, and underneath it we have downside potential. So if realistically, if we lose 41.33 again, then I'm going to start looking for this pretty much 40.85 to 41.05 area. But if we can get back over 41.50 and make the 8 EMA support again, then we're going to start talking about going to 41.75 all the way up to maybe even 4,200. Now Tesla is just absolutely insane. Just such a volatile and crazy stock. So today, I put in a $20.38 total move of range from the open to close. So the low of the day to the high of the day had a $20.38 range, which is crazy when you think about the fact that IV, which was actually extremely low on Tesla today, had an $8 move priced in, and it went $20. So that was almost 3x the priced in move for the day. And it did it on relatively low volume. We only hit about 215 mil, which is about 110% of the 30-day average. So tons of movement here. So looking at Tesla, it really looks like we're going back up for another one of these 215 daily 200 EMA retests. That's a high probability area for a rejection. If we were to reject here at the 200 EMA, then we're going to start looking for a downside again, much like this pattern. Same thing here in Tesla. We had that bull channel broken, but we redrew it with the last supports here. So this is pretty much the last defense for the bulls. And our major levels to watch is 215, and then now major support is going to be down here at 191.8. And then we have the VIX. The VIX had a pretty incredible day. I mean, I understand why the VIX dropped with the fact that numbers came out and, you know, we didn't dump on the numbers and everything like that. But I mean, overall, the VIX kind of really underreacted, I feel like. And I don't really think this narrative of the VIX dumping and that all the fear has left the market is very accurate, personally. If you really think about it, I mean, we have a lot more to think about now with these inflation numbers. I mean, this inflation did not cool down the way people thought it was going to be. These inflation numbers were pretty, not hot, because they didn't obviously miss the previous inflation besides, you know, month over month. But I mean, this showed us that the inflation is going to be a struggle to get down to that 2 to 3% area they want it to be at. So, but overall here, we're taking a look, and the VIX is down back in this pretty critical 18.3 to 19.3 area. You can see how many times we have bounced in this area here. So I'll be interested to see what the VIX does tomorrow and market wide. Last little piece of the puzzle here is Bitcoin. Bitcoin remained bullish today, which did give me a slight upside bias, and that is something I definitely kept my eye on throughout the day. So if the Bitcoin was to double top here and start pushing down, that could signal a top. But the thing that is impressive is the fact that you have stocks like Nvidia and Tesla that were all pushing super high and super green today, but then you have most stocks like Apple, Google, were red almost all day. Microsoft ended up closing just slightly green, and Amazon and Meta were pretty red for the most part too. So very interesting here. We're at a pretty big crossroads. My thoughts would be we are in a consolidation period here, and this was our touch of the top. So I do think we're going to come back down to 40.95 on futures, maybe even tomorrow. And if we can hold 40.95, then I like a pushback up. But I really think we're just kind of entering a consolidation period now. And I just don't think we have enough overall movement to really say, yeah, we're gonna go up here to 4,200, 4,300 area. But unless the market tomorrow wakes up and realizes that, you know, this was an underreaction to not so great numbers, I just don't think we're really going to get a big downside. Now, again, looking at the last two CPIs right here, previous CPI had, a pretty good doji day, and then we started a massive downturn. And then last CPI, kind of similar, we had CPI come in, then we had just kind of a doji, nothing day, a top, and then we had a big drop. So there is a potential of a pretty good sized drop to come tomorrow, or maybe even end of week. But honestly, right now, I'm neutral to, I would say, bullish until we pretty much close under 40.95 on futures. If we can close under 40.95 again, then I will consider being more bearish. But for now, I'm just neutral and looking for some consolidation until basically otherwise proven. So, all right, we'll see what tomorrow brings. I hope you guys had a good day trading today, and I'll see you guys tomorrow. Thanks for tuning in for this video. Don't forget to subscribe, follow, and like to stay updated. Drop a comment if you have any questions. This is the permanent Discord link. Sometimes that does not work for whatever reason. Just go ahead and drop a comment, send me a message, and I will get you an updated link so you can get to the Discord. Some of the advantages of the Discord is I do a pre-market update with key support and resistance levels every day. And also throughout the day, I do live intraday commentary on SPY and the general market. And I also do live intraday buy and sell alerts. You can follow me on YouTube, Twitter, Instagram, or TikTok as Spy Optionaire, and on Reddit as Daddy Dersh.